Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about gold. First, I'll give you the technical aspect, then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders. And then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows, showing very strong bullish momentum. And all this push to the upside is fueled by very strong institutional buying. And that is something that we will speak about in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that institutions are buying aggressively and that all this uptrend comes as the development away from the break and retest and rejection to the upside of an important historical structured zone. This level, in fact, was acting as previous resistance across many years, with the market respecting it as such, creating rejections to the downside every time that it was testing that zone. However, recently we saw the breakout to the upside, retest of the level, and the market started all the development of this strong bullish uptrend away from that a historical, in this case, demand and support zone after the breakout to the upside. So far, the market has been behaving exactly as you would expect in a situation like this. So breaking, retesting, and rejecting to the upside this strong historical structured zone. And after that, all this massive uptrend to the upside started developing. So on the monthly, everything is clear. Let's drop that on the weekly time frame and see what we have. Now, from a weekly perspective, the situation is very interesting as well, because also here on the weekly, we have a pattern which has been essentially completed as you would expect, again, in a situation like this. So far, the market has been quite predictable. What we have here, in fact, on the weekly time frame is the creation of an ascending triangle formation. When you see the creation of equal highs, as we had right here, but at the same time, higher lows, what this means is that buyers are still in control of the market, even though they're not managing to break above this resistance level. Because even though sellers are respecting this resistance, are protecting this resistance level, if every time buyers are creating higher lows, it means that buyers are still in control of that market. And it's just a matter of time before we see the breakout to the upside, which is in fact exactly what happened after that. And so far, the market has been in a very strong bullish mode with this huge impulse to the upside. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Dropping down on the daily time frame, we can see that impulse to the upside is composed by a series of impulses and corrections, because we already know that no market, doesn't matter how strong the trend is of that market, no market can just go up in a straight line. Every push to the upside is composed by a series of impulses and corrections which create the higher highs and higher lows and create the uptrend itself. So since the last push to the upside was this impulse, there is a good probability that this market could be overextended to the upside and now in need of a healthy correction. Now, if we move to the commitment of traders analysis, we can see that first of all, we are missing the data for the last 2 weeks. Now, why is that? Well, that is because of the US government shutdown. When they are shut down, obviously they will not release new data. So we are missing the data, but we can focus on what was happening just before we started missing the data. And we can see that shorts were started to be added. We have 5,600 shorts added just with the last report. And we can see that already shorts were being increased from an institutional perspective, going from 55K all the way up to 66K. I definitely wouldn't be surprised if when the reports will resume, we will start to see even more shorts that were added while we didn't have the reports, because institutions should see this market as overextended and potentially start adding more shorts. Now, in the long term, big picture, gold is obviously still very bullish with 332K longs compared to only 66K shorts. But if we have to focus on the short term, there is definitely good probability of seeing some short-term bearish price action and institutional shorting potentially contributing to a short-term correction to the downside. So in a situation like this, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description so you never miss new updates. So in a situation like this, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, I wouldn't be surprised if this market would shift from an intraday bullish to a bearish market and provide a rejection to the downside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.